This engineered wood player has become the first in India to adopt the EvoFuge 360 system, reducing steam consumption and cutting down on energy costs. With Rs 134 crore plywood capex, margin recovery potential, and strong delivery-based volumes, it's catching the eye of serious investors. Its stock has also surged from Rs 140 to Rs 265 in the last 2 years, giving investors a whopping 90% return. Stay tuned to discover this sustainable stock in expansion mode. Hey there, and welcome to another exciting edition of Noisemaker, where we screen through the noise to uncover hidden gems in the stock market. I am Nishant Prasad, Equity Research Analyst at Desvelado Advisory. In today's segment, we analyze two companies making strategic moves that could fuel their long-term growth. As always, this is not a buy or sell recommendation of any sort. Today's lineup includes Sanathan Textiles Ltd and Greenply Industries Ltd. First company, Sanathan Textiles Ltd, is a polyester and cotton yarn manufacturer catering to both domestic and export markets. With a growing focus on technical textile applications, the company's long-term credit rating has been reaffirmed at A by ICRA, while the outlook was upgraded from stable to positive, supported by a 32% year-on-year EBITDA growth to Rs 195 crore and a 43% PAT growth to Rs 117 crore for 9-month FY25. Financially, the company reported Q3 FY25 revenue of Rs 748.6 crore with a stable EBITDA margin of 7.9%. Net profit margin has also improved to 4.6%, up from 4.4% in the last quarter, reflecting sustained operational performance. The company is strategically shifting its product mix toward high-margin, value-added yarns, including texturized, colored, and stretch variants. This positions Sanathan to capture premium demand across segments like technical textiles, backed by policy-driven industry tailwinds. Next company, Greenply Industries Ltd, is a leading interior infrastructure brand renowned for its plywood, MDF board, and flooring solutions. The company recently commissioned India's first EvoFuge 360 steam recovery system at its Vadodara MDF plant, enhancing energy efficiency and reducing costs by recycling 25% of waste steam. Financially, Greenply reported Q3 FY25 revenue of Rs 617 crore with EBITDA margin steady at 8.8%. Net profit margin improved to 3.9%, up from 2.7% in last quarter, reflecting better operational control. The company has committed Rs 134 crore toward expanding plywood capacity by 25%, aligning with its broader growth strategy. With a focus on strengthening its product range and enhancing manufacturing efficiency, Greenply is well positioned to benefit from rising FII interest and ongoing strategic capex investments. Let's review some of our previous picks. Gallant Ispat Limited, covered at Rs 367, is now at 410, up by 11.7%. Shera Energy Limited, covered at Rs 162.6, is now at 151.9, down by 6.5%. Power Mac Projects Limited, covered at Rs 2299, is now at 2590, up by 12.6%. Keytech Garment Limited, covered at 170.9, is now at 193.8, up by 13.4%. Gina Seco Lifecare Limited, covered at 1650, is now at 2134, up by 29.3%. Summary of today's recent filing. Sanathan Textiles Ltd received a credit rating outlook upgrade from ICRA, backed by ongoing capacity expansion and policy tailwinds in man-made fiber and technical textiles. The company is well positioned for margin improvement. Greenply Industries Ltd installed India's first steam recovery stream, committed Rs 134 crore for plywood expansion, and is enhancing product margins with upcoming HDF and glue plant launches. That's a wrap up for today's Noisemaker. For more details, check out the full report in the description.